Welcome to the Seller Roundtable e-commerce coaching and business strategies with Andy Arnott and Amy Wees.
Yeah, absolutely.
And just to add to that, I'm hoping you can hear me better, but what is kind of in theory, it's not really what's happening in your bank account. The cash that's showing up in the banking account, all businesses have to operate, because that's, and I see it's showing unstable. I'm sorry, I'm not sure what to do here.
No worries. Yeah, it's weird because I'm not seeing a passcode. We don't know. I don't have a passcode set for the meeting, so it's strange that it's not letting you in.
When I logged in, it asked me for the ID and all of that, and now it's saying meeting passcode. And I with me.
Yikes. Well, shucks. Well, we'll just do the best we can here. Amy, did you want to go?
Yeah, absolutely. So, Cyndi, when you first start bookkeeping for your e-commerce business, I know so many people I made the mistake of hiring an accountant and trying to do my own bookkeeping and hiring an accountant just to do my taxes. And that totally backfired on me. I ended up having 2 years of tax returns be totally messed up. And my accountant now, who specializes in e-commerce, has fixed all of that. She more than paid for herself. And, I would never go without an accountant again. But, when you first start bookkeeping, when you first start kind of keeping track of your expenses and you're a brand new seller, what are those things that you should be keeping track of? What are those minimum things that you should be paying attention to with your bookkeeping?
The thing that I think that's really important is to understand gross margin perspective. And that is looking at the revenue that you get in and comparing what that profitability is that's left at that gross margin level. I think that's fun. So many times we're looking only at product profitability. We don't think about shipping, small in comparison to what our product costs are. And we ignore those things, they can erode our gross margin. So I think that's the first thing, is to get really clear about what dollars come out and make sure you're operating at least a 30% gross margin level. And many times people are seeing wild month by month comparisons in their financials because they're not buying it for 2 or 3 months down the road. And when you operate on a cash basis for your accounting, you don't really see that comparison. So we like to get our clients on what we call a modif to get a true gross margin calculation. So I think that's one of the first things that people should pay attention to.
Okay, I think I caught most of that. There's, it's coming through really choppy. So I'm trying to, so you want them to pay attention to their gross margin calculation.
Yes.
And then keeping receipts, that's another big thing. I didn't know that I was supposed to keep receipts. And when my accountant fixed all of my my accounts, she was like, yeah, you need to be keeping all of your receipts. So, but what systems should sellers have in place to ensure profit?
I'm trying this phone number, so just give me one.
Yeah, no problem.
To see if this will work. I'm gonna mute.
Yes, we all want to pick Cyndi's brain and make sure that she can give us the max value. I know we're all ready to hear from Cyndi.
Yeah, it's as far as I know, when I've called in the past, it hasn't been a passcode, but Zoom keeps updating things like crazy. I think because of all the Zoom crashers and stuff that were going on. So now it's just it's getting crazy in terms of trying to keep up with what they're doing there. But
Right.
yeah. So go ahead,
So
Amy.
for me to keep track of receipts, I actually use Airtable. You can use QuickBooks, but I use Airtable because they have this. Airtable is an online free soft spreadsheet program. And it is incredible in terms of tracking receipts because you could put the app on your phone, and I just find it much easier to use than QuickBooks. So that's what I use. And then I give my accountant the access to the Airtable, and she's able to check all of my receipts. Cyndi, are you back with us?
I think I am.
Yeah, I think you are. If you can turn your speaker down on your computer, because we're hearing ourselves. If you do that, I think we should be good to go. Thank you for figuring that out. Amy, that's a great tip. What I've found too is anybody who's in the Google sphere, I don't know, people use Dropbox, Google, whatever. But Google Drive has a feature called Scan, which I use all the time now. So I just have a folder in my Google Drive, and then whenever I get a receipt, I just just put it out on the table and just snap a picture, and it actually like makes it into like a PDF, like you scanned it automatically, which is really useful.
And Marina says she uses HubDoc for keeping receipts and sharing with her accountant. Okay,
Nice.
HubDoc, I haven't heard of that one.
Yeah, lots of
That's
options
awesome.
there.
Cool.
Yeah,
And so,
HubDoc is-
Cyndi, what we were talking about is if we want to just kind of recap the last question. So when you first start bookkeeping, what are some things that you should be keeping track of besides like keeping your receipts and stuff like that? What are the numbers? Like if you were to create your own spreadsheet, what are those things that you should keep track of?
Well, I think what you all are talking about with keeping receipts is good. If you use QuickBooks, I know Andy was talking about taking pictures and putting it in Google. You can do that directly in QuickBooks now. You can take a picture, it goes directly into your QuickBooks app. So that bypasses all of that. And what's really nice about it is that it attaches it. You can attach it to that transaction that will come through your bank feed, and it's just all connected right there together for you. So that's really nice. The other thing that is important if you're just getting started is to be careful not to mix your personal expenses in with your business expenses, because it's real easy just to say, well, I'm going to use this credit card because I left the business one at home. And once or twice it's not a big deal, but you really want to just get in the habit of always keeping your business and personal expenses separated. Your accountant will thank you. And if you are ever in a situation where you're audited, it is much simpler to focus only on either the personal audit or the business audit and not open it up for everything to be considered by the IRS.
Got it. That makes sense. Yeah, I know I have gotten in trouble for using. It's okay to use personal credit cards because in the beginning, when you first start your business, you're not going to have enough business credit to have business credit cards. You might have one that you're able to get, but it's okay to use personal credit cards, but you need to only use that personal credit card for business and not mix it between personal and business. Is that right, Cyndi?
That's right. You just don't want those things all commingled together. Set aside, this is the card I'm going to use, and designate that your business card, if you will. But don't put your personal expenses on it as well.
Got it. And then in terms of tools that people use, you mentioned QuickBooks, but are there any other tools that we should be using for accounting and really for keeping track? Is it okay when you're first getting started to put together a basic spreadsheet? Should people be doing that? Is that a best practice? And what kind of tools are most helpful for just getting started as you're scaling your business?
Well, for just getting started, there are a number of things like Inventory Lab, Seller. I'm thinking of Seller Board, but I'm not sure if that's in the U.S. or I was just using it with a UK client. But there's all of those kind of pseudo accounting systems that will give you some data from Amazon, because they do connect into Amazon. And I think there's a place when you're just getting started for that. Where that gets people in trouble is when they are not very carefully managing it those systems aren't actually reconciled back to any kind of bank account, so they can give you misleading information. So I suggest people get on a system like QuickBooks or Xero as quickly as they can. Now, I know there's a cost for doing that, but if you can get on those systems as quickly as you can, then you've got a real accounting system that you can hand over data to your CPA. You can have confidence that if you run it right, if you do your reconciliations back to the bank, et cetera, then you can have more confidence in your in your numbers, in your financials. I think people have gotten into trouble using these apps that connect to Amazon and believing those profitability numbers. And then when we actually get them on a real accounting system, what we see is that they're not nearly as profitable as they thought they were. And, you know, I hate being in that position of delivering bad news, but now it's a cautionary tale for others, right? It happens enough that it's just very hard to keep those systems up to date because there's no reconciliation feature to ensure that you've got everything right.
Right. Yeah, I think it's good in the beginning just to be tracking things, but in order to make sure that over time you are really tracking things more closely so you can see if your business is in trouble, you know, that is really, really important. So QuickBooks is very affordable. You know, it's like $20 a month or something for QuickBooks Online. So there's really no reason that all of us can't get started with very basic accounting software and start kind of tracking those expenses and everything. So that is great, great advice there. And it's okay to start with some software in the beginning, you know, some Amazon software that's already giving you some data, but you should be tracking. Make sure alongside of that you're tracking your expenses, that you're using one card or one account for business and a separate account for personal and all of that. So I would like to know about reinvesting profits. So during our audio mix-up, I was talking about how I was just going over my P&L statement, and I am reinvesting in my business right now. I'm expanding my line, so my overall number at the end of the day is negative because I've spent more on new inventory than I've gained in profits this year, which is good for my next year's bottom line. Will be really beautiful. But when we're talking about reinvesting profits in the business, how much profit should a business be reinvesting?
Well, I think they're two different things. So when we talk about profit from the profit first perspective, we're talking about cash in the bank. We're not talking about the bottom line on a profit and loss statement. And really, in a business that is set up running a modified cash type books, you want to be set up where you do have a bottom line. Now, if you're wanting to reinvest in inventory, if you're set up with books the way we recommend, that happens on your balance sheet and not your P&L. So I think we're talking about two different things here. You're probably preparing your books to be used for taxes. And in that situation, you don't really see profit from this perspective of how the business performed in a true light about profitability. It's more from what's happening to your cash and how are you setting up for your tax situation.
Yeah,
so I just want to be clear. There's different reasons we have books for different things. You know, you were talking about Rich Dad, Poor Dad. That book was about, I think his name is Keith Cunningham, and he has a great book that explains how you need to actually have three sets of books. You need to have one that's for your tax person, you need to have one that you run your company, and then you need to have one that tells you what your cash position is. Now, I think that's overkill, quite honestly, but from a strictly, the way I would recommend running a business, I would want to have a set of books that operates with a modified cash type of approach. And that will show you whether or not you are truly profitable in your business. Now, then there's what happens with cash and how you may be reinvesting it in inventory, et cetera. That should not show up on your profit and loss for the way I recommend you run your books. And so in the world that I like to operate in, I want you to always show profits. Now, how you're investing your cash in the future, that you need to be able to see on your balance sheet to know that you move that cash over into inventory. It's basically cash you can't spend, right? But you have an opportunity to use that money down the road to grow your business. And that really comes down to a risk that you might be willing to take. Is this product worth investing in because I think it's going to pay off in the future? And that's a very different question than is it profitable or not. So I like for people to look at their books from the standpoint of they need to be profitable, because you can't sustain that long term if you're not. Small businesses just need to operate from a cash positive perspective. But then on the other hand, how you actually deploy your assets is kind of a different question. Did I confuse that enough?
No, I think it makes complete sense. So you need to make sure that you're profitable, bottom line. And then you have your books that you use for, which is what we were doing. We were going over our books for tax purposes, right? And that final number, but not overall in terms of profitability. We need to be making sure that overall between what we're buying and we're selling, that we're profitable, and overall with our operating expenses and everything else. So that makes sense. So you kind of covered that we should be covering our books. We should be tracking our books in different ways so that we can, number one, ensure profitability. Number two, understand how we're investing and what impacts that will have in our business, and not reinvesting in unprofitable products, right? We don't want to be continuing to reinvest. And a lot of sellers are doing that, right? A lot of sellers are reordering products that are not profitable. And that becomes a really big problem. So in terms of barriers, that sellers have come up against, what kinds of barriers are you seeing sellers come up against? What are the biggest things in e-commerce that sellers are struggling with? And what are some examples of how you've seen them overcome that?
I think this idea of product profitability is something that easily gets out of hand. When you have just a few products, it's easy to see how you're performing. And when you're buying products, it's easy to look at it from the standpoint of it's going to be a money-making proposition. But things happen over time with how we advertise for that product. Things change with maybe a repricer going in and pricing. So that idea of what that number is for profitability by product is fluid, and people lose sight of the fact that it may change over time. And that's another area where when they're using like these third-party apps to track profitability, and they go in and they set, this was my cost, but then they fail to add what the costs were when the product went up the next time they ordered, or they failed to factor in what the advertising costs were. And over time, they lose that there's a big disconnect between what's really happening and what data they put in the system. So an accounting system that's reconciled back forces you to fix those kinds of issues, because something is going to not tie out if you go to reconcile and you're not paying attention to those numbers. So those are the kinds of things that I see. Also, when people start to have more and more products, they lose sight over how the entire product line or their whole portfolio might be performing. So when they lose sight of the fact that their best-selling item is actually very low margin, it can really skew their profitability. So we like for people to, if they've got a number of products, we like for them to investigate, look at the top 20% of your sellers and see if you're still profitable for those top 20%. And then maybe look at the bottom 20%. Is there something you can do there to either knock those things off because they're just tying up your cash, or maybe you need to do something to beef up their sales because you've got good margin. And so when you have a lot of products, it's hard to look at every one. But if you'll pick your, that 80-20 rule, pick the top 20 or the bottom 20 and try to understand what's going on there, it's likely there's where you're going to have the biggest impact on your profitability. The ones in the middle are probably not going to be swinging you as much as the top and the bottom of those numbers.
Yeah, those are all great points. As you were talking about that, Cyndi, I literally wrote into my little doc here, 80-20, focus on the winners. And I can personally attest to this, right? Because Amy always jokes about me. At the peak, I think I had close to 900 SKUs. I started in 2011, I think, or 2012, kind of right around there. And so, back then I was just gung ho, and my goal was like to add a product a week, which is crazy, but I did it. I mean, I just knuckled down and reinvested like crazy. And I think that's why I scaled and grew my business so quickly. But like you said, it got to the point where like trying to manage it. I mean, even today, trying to manage the catalog of, some of this old inventory and stuff that we have that we're just trying to get rid of at this point. It's just terrible. I mean, my wife and I, who's, she started as my business partner. Now she's kind of like written herself out because she's doing real estate now. And we're really, that's kind of our other thing that we're doing right now. But going back, we were talking last night, it's like, at what point do we just say, you know what, the energy to like keep selling this stuff is just not worth it. The profit is, not enough it's like your time is money, right? Your energy is money. So if you just cut all that stuff out and just go for your winners and just really concentrate on those winners, really get brand awareness, really get, just refine that product, make it better. I mean, Amy's been doing this for her product, which is great. Keep the catalog small. To me, it's if you can find stuff that's as closely related to your main product, absolutely, because then they complement each other, right? And then selling that kind of complementary product won't be very hard because it's part of your main focus, which is, those winners. So I absolutely think that that's excellent advice and something that, like I said, it took me a while to learn and I'm learning more every day in terms of, really doubling down on what's working. Now, Cyndi,
well, added to that, Andy, you were talking about how it ties up your energy. It ties up your cash too.
Yeah.
And, when you've got cash tied up in things that aren't really performing, then that keeps you from investing in the things that are. And I see that over and over with clients. They're like, well, I'll sell a few of these a month. And I'm like, well, but look at the money. And sometimes they're really big, high cost items. I'm like, your cash could go to buy, 50 of these smaller things that you have way more margins on that turn over. This cash is just sitting here, not working for you. So, and you've got the energy to think about, okay, what's going on with the pricing and what's going on with the advertising, and you spend time managing something that your return is just very small. So between the energy and the dollars, it really was a sink for resources.
Yeah, absolutely. And yeah, I mean, it's definitely, you're still marketing those old products. You're still, what we're doing right now is when we run out of something, that's not in the top 20, we just let it die. We don't reorder, even if it's making us a little bit of money, because, time is money, focus is money, all that energy is money. So, we're doing that. So,
good deal.
Yeah. On that same point, in terms of, seasonality, we're into Q4 now. It's going to be an interesting Q4 because we've got these crazy dynamics going on, right? We have, ordering online is gone up a ton, but then we have this election coming up. There could be some, a lot of unrest where people are not shopping on Amazon because they're worried about, getting their TP and their paper towels, so it's going to be a really interesting Q4. Any tips in terms of, being strategic when it comes to spending money in Q4 for your business?
Well, My tips are mostly around how to keep money, not spending money. So that's my theme.
All right.
What I see happen in Q4 is big influxes of cash for our businesses, and let's hope that's what we see this year with all these dynamics. We don't know, but I do anticipate from what we're seeing since March on that things will continue to increase with sales. So with that in mind, what happens is those big cash influxes come in, and we get back in that Parkinson's law mode where we see, I've got a lot of cash. What am I going to do with it? And my recommendation is look at what your operating expenses are month by month. I mean, you should be able to go back the last 4 or 5 months and see that you're spending, $1,500, $2,500, whatever it is, and know that that's kind of your monthly base. When your bank account has that much money in it for operating expenses, then I say take the rest of it and put it in a profit account. You want to get it out of there, because the tendency is when that operating expense account starts to grow, you start thinking of other ways you're going to spend that money. So I want people not worrying about how they're going to spend that money. I want them thinking about, I'm just going to keep Q4 steady. All this money that comes in, I'm going to move into that savings account. I'm going to continue to do the, putting money in the inventory account like I've been doing. But anything in excess that comes in that operations account, I'm going to put in this profit account. And then after the dust has settled, and we're looking in January to see how things really are, then you can look at what that balance is and make a strategic plan for how you're going to put that money to work. You probably want to check in with your CPA. If you're showing a profit in your business, then part of that money needs to be set aside so that you're ready for taxes in April. Part of it may be that you're ready to launch a new product, or maybe you want to set aside more money for advertising this year. But it's the perfect time to sit down with that extra cash that you have from Q4 and figure out the best use of that money. And I guarantee you, because I've seen it over and over again, if it's just left in that operating account, it will be frittered away and you won't know where it went. But if you determine this is what my monthly base is, I'm going to keep that balance in that account. I mean, you don't even have to do a whole lot of math. You can just say, I need $2,500 in this checking account. When I'm over that, I move any amount over into my savings account. And you just do that for the whole rest of this year. And then in January, as the dust is settled, you can look at what you have left and think, okay, now how am I going to use this money for my best use in my business? And don't forget taxes, because that'll be coming up soon.
Oh, Cyndi. So you're saying I can't go out and buy my Lambo and my beach house in Hawaii. That's disappointing. That's very disappointing that I can't just raid my business, not keep it healthy, and buy my beach house. No, that's all.
I'm probably not going to get invited back ever again, right?
No, you absolutely are, because you're speaking the truth. And that, that rule, I mean, like I said, I from personal experience, that's absolutely the case. One of the things I've been doing to trick myself into not spending, more money, even in my personal life, I raid my own account, right? So I get like, whether it's like Wealthfront or Robinhood or like one of those apps, Acorn, and I just have a recurring draw from it, all the time. I think it's on every 2 weeks now. And it's awesome because, I'll put it in there and I'll forget about it. And then at the end of the year, I've got that little backup money, or if there's an emergency or whatever, so I think that's absolutely right. And that's why I love the kind of bucketing of funds, right? Because if you put those funds like for taxes to the side, you're not going to spend those because like, hey, I'm going to have to pay this. It's not, it's like paying your bill early, right? You're not going to have to worry about it now at the end of the year because you've already set it aside. So, I absolutely think that that's the way to go to keep your business healthy. So on that note, anything else, really that you would, give advice to for new sellers? Maybe this is their first time in Q4. They're really picking up steam. They're starting to make a lot of money. Any tips on, where they should be, setting that stuff aside? Anything else they should be doing to, keep their business healthy?
I think this Q4 is unusual. So I don't have a crystal ball that works for this year. I do know that what I've seen happen in the past is people are really aggressive about what they think they can do in terms of getting products into Amazon by certain dates. And I've seen it backfire a number of times. And I suspect this year the risk of that happening is even greater as Amazon's warehouses are just being bombarded with product. And I mean, even they are ramping down how much they're going to allow people to send. So I think just develop a plan, work your plan. Don't get caught up in the hysteria of if I could just get more product there, and try to just be super aggressive at getting product in there. I think this year that is a risky proposition. In addition to that, I think being very careful about the money that you do earn, putting it in that extra account, like we've talked about. The only thing worse than not having money than paying taxes is having to borrow money to pay taxes. And, so take January to kind of get your feet under you, maybe sit down and talk with your CPA and say, this is kind of what my numbers are looking like, and get a good read from them before you get too aggressive with buying your beach house in Hawaii.
Oh, all right, fine. That's actually great advice though, Cyndi. In terms of stock to Amazon. So, we've been sending some stock to Amazon, and what we've noticed is, and this is, my experience, so this will not be, probably exactly for everybody, but what we've noticed is that if we go to New Jersey, which is generally the largest fulfillment center, so generally if you're sending like large amounts, LTL, or a ton of units, that they normally just have you send them all to Jersey. And normally we love that because we save on shipping, right? We go, oh, we only have to ship once and it's much easier logistically and all that. But what we've been finding this year is that if you split that shipment up, and and you can do that by, if you've never done the FBA shipment flow, you guys can, you just change the numbers of boxes that you're sending, right? Cartons. So, if you've got 20 units in a carton and you're sending 5 cartons and say, oh, go all to New Jersey, you change that to like 3, and then it'll say, oh, send 1 to California, send 1 to Texas, send 1 to Jersey. Now, like I said, in the past, I used to hate that because then I'd have to do extra work. But this year, it actually seems to work better because you've got 3 fulfillment centers now. And depending when those products hit that fulfillment center, it might get checked in California and Texas and not Jersey, or vice versa. But you kind of have, I've noticed, like more of a chance to actually get product into FBA. So just something to mention on that note, Cyndi, I wanted to add that because that was such great advice there. We always like to ask this, and but I'm gonna have to put a caveat here, Cyndi, because we're gonna exclude Mike Michalowicz's books because we already talk about him pretty much every episode. I think he should write me a check, Amy and I a check at the end of the year, and same thing with Robert Kiyosaki, because I'm pretty sure that we've sold him quite a few books. Besides,
bold.
Yeah, but besides that, no, I'm totally kidding. I'm just kidding. But besides that, any other books or podcasts? I want to be selfish here, Cyndi, because once again, like I said, I am terrible with numbers. Like my wife and I keep thinking about maybe we're going to go to like Boise State here and like take a class or, do something like maybe I'll get my MBA, but my numbers is my kryptonite. So for me, past Profit First, which maybe I should just read Profit First again. I've been thinking about doing that anyway, but anything else that you can, that you can recommend for people to really get a handle on their personal and business financing?
I really like, let me just grab this book and I'll show it to you. I really like this book, and it's the one I was referring to earlier by, it's Keith Cunningham. Let's see, right there.
There we go. Yep.
It is the book that, this moves different than I think. This is the book by Keith Cunningham, the guy that is the rich dad in the Kiyosaki books.
Oh.
So I think that book does and he's got several, so you might find another one, but I really love the way he lays out how finances work in business in this book. So, you can read that book save yourself a lot of time and headache with trying to go back to school. And because honestly, I think he explains it just brilliantly.
Awesome.
So that's one of my favorites that I like to recommend to my clients.
Perfect. I'm surprised that, I haven't heard of it. That's crazy. Because I'm usually really seeking out those types of books. So great recommendation. Thank you. It's definitely going to get added to my, my Audible list. All right. So Cyndi, now this is where we get to let you gratuitously plug anything you want. So let people know where they can find you, your website, your book, all that great stuff.
Okay. I'm at bookskeep.com, BOOKSKEEP.com. And one of the things that might be of interest as you're talking about newer sellers, we do have a program called Smart Start. And basically what we do is go in and create an accounting system for our new sellers. We get the chart of account worked out. We get the mapping to A2X, which is the integration that we like that goes between Amazon and QuickBooks or Xero. With that service, we set that all up, and then we do 3 classes where we do hand-holding with the seller to connect their bank accounts, where we show them how to do it. We show them how to do their reconciliations, the coding, all of that kind of thing, so that by the end of those 3 calls, they're able to go off and do their accounting by themselves. And should they run into something that they have trouble with, we have a monthly huddle where they can come and ask their questions. They can send email questions anytime, but if they want somebody to sit down with them and go over what they're doing, they can come to the monthly huddle. So for new sellers, I think it's a great way to get started. We can also provide QuickBooks Online at our wholesale rate, which gives people a little bit of break in the subscription. So that might be of use to those people that are just getting started.
Awesome. Will you set up my bank accounts for me too, Cyndi? Like if they're already there, you'll work with me on how to separate,
connect them into QuickBooks.
Well, and separate it out, do the profit first, percentages and all that. Do you help with that as well?
We do. Now, that is not through the Smart Start program. That is through our Profit First services. And we do that we won't actually set the accounts up unless you're working in something like a relay bank, where they have a permission for us as a accountant to go in and do those kinds of activities, but we can't transfer money out of your bank.
Right.
So as a firm owner, I don't want that kind of liability.
Right.
But for something like a relay bank, it works really well because we can go in and actually do the profit first for our clients, and they don't have to go in and do the transfers.
Perfect. Awesome. And the other thing that Cyndi's not mentioning, which I know about, is they have an awesome newsletter. I signed up for it a couple months ago, and there's great tips in there and stuff. They have some great guest posts and things like that. So yeah, check that out, guys.
I would agree. I was going to mention that earlier. I love your blog posts and everything. It's awesome. I always read them. They're always super valuable in my inbox, and I get great tips from you. So thank you for that, Cyndi.
Yeah.
Oh, that's great feedback. We never hear, so I am glad to hear that. Thank you.
The reason I knew it, I remembered too, though, is I think I got one this morning. So I was like, this is perfect timing. And it was good information.
They come out on Tuesdays.
Yeah, there we go. Perfect. All right, Cyndi, thank you so much. Thank you, everybody who joined us live. You guys really love having you guys in the audience here. If you guys don't know, when you join us live in the Zoom call, we stop the recording, we stop the live stream, and you guys get to just kind of have a little meeting here at the end. We ask the guests to say, sometimes they do, sometimes they don't. But if they don't, we're, usually pretty skilled at being able to help you guys. But, you're not paying our expensive hourly coaching rate. So if you guys want to join us live, sellerroundtable.com/live, Tuesday, 1 p.m. Pacific time. If you haven't yet, we really, really appreciate you guys subscribing, rating, sharing, all that good stuff. I know you guys hear it all the time on every podcast and YouTube video and things that you watch. But the reason is we're not charging for this, and so really that's our kind of what we get out of it is to help as many people as possible, and you can help us with that effort. So we really appreciate that, guys. And we'll see you next time on the Seller Roundtable. Thank you guys so much for joining us.
Thanks for tuning in. Join us every Tuesday at 1 p.m. Pacific Standard Time for live Q&A and bonus content after the recording at sellerroundtable.com. Sponsored by the ultimate software tool for Amazon sales and growth, SellerSEO.com and AmazingAtHome.com.